FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Good morning, and you are listening to the Financial Survival Network. This is Kerry Lutz. The date is October 21st, 2015. Earnings, the battle for gold and silver at the 200-day moving average. So many things happening, and it's what's not imploding next with Andrew Hoffman. Andy, as always, great to talk to you.
Yes, same here. And boy, do we have a lot to talk about today. Where do you want to start?
Well, I think we should start with those earnings and the implosion of a couple of America's marquee brands, mainly Walmart and Mickey D's.
Yeah. I mean, look, it's no surprise that earnings are bad. We already, in the last year, I think every quarter for the last 3 or 4 quarters, the S&P 500 has had negative year-over-year earnings. Okay. And recall, the whole price to earning ratio, if we had free markets, typically is often based on growth rate of earnings. Forget the fact that earnings are now fudged more than ever, or the global economy is collapsing, all that stuff. We're talking about for a year now, we've had negative earnings growth. Negative earnings growth. Earnings are falling, and yet we're supposed to believe that the stock market is at an all-time high or close to it on its own volition. I mean, we're talking about with each passing day, the gap between reality and the Dow Jones propaganda average is widening. The thing is that around the world, the average stock market is in a bear market. And of course, now that commodities are in a renewed bear market, meaning the dead cat bounce is over decidedly, we're talking about some real carnage that's about to hit in the next few months. And when you talk about specific companies, remember, we've been told all along that the Fed, that their big thing is the employment. And, they've been able to goose the numbers to make the unemployment rate go down, even though it's based solely on people leaving the labor force. But now we're talking about starting with last month's NFP report. We're talking about the beginning of the really, really bad reports, the ones that can't even be goosed by statistical measures. Like last month, they only reported 140,000 jobs when they were expecting 240,000, and they had to revise the numbers down in the past, and all the other supplemental data was just as bad as usual. But now we learned yesterday that the BLS showed their September data for the individual states, and instead of showing 140,000 gain, it adds up to negative 22,000, which is far closer to reality. So people are seeing that we're losing jobs. And the fact that the only jobs we were actually gaining were part-time minimum wage jobs in the first place shows you just how bad things are. And remember, those short-time, part-time minimum wage jobs can go as quick as they can come on. So you're talking about, the main companies in America. Well, let's see. The 3 biggest employers in America are the Department of Defense. Isn't that great? Number 2 is Walmart, and number 3 is McDonald's. Well, the Department of Defense, there's rumor right now that Lockheed Martin, which is a $40 billion operating expense budget, is going to cut 30% of its overhead. 30%. That's a lot of jobs in the number one employer in America. Number 2 is Walmart. Walmart last week reported not only that they expect lower earnings in 2016 and 2015, but flat revenues. So they're saying that business is going to be no better next year than this year, and that earnings are going down. And they are the biggest public employer in America, private employer. Number 3 is McDonald's. McDonald's is so bad. I was just reading an article showing that, their same-store sales have been down 10% now for the last year or two. The franchisees are saying we're in a depression that we'll never return from. McDonald's is a combination of people don't have as much money to spend. And of course, McDonald's isn't as cheap as it used to be. Plus, there's a secular trend away from that kind of food. So we're talking about the 3rd largest employer in America is probably going to be laying off a lot of people. And again, a lot of those minimum wage part-time workers that vanish off the payrolls as quickly as the BLS fraudulently puts them on there. So I think that we're going to start to see the negative employment numbers in the coming months like we saw during the height of the crisis. And again, that's just a couple of companies. We're talking about across the board miseries. I mean, look at IBM, which is leveraged to the hilt, a perfect example of a company that sacrificed itself to the Federal Reserve's policies. It stopped investing in its business. It started borrowing like crazy to do stock buybacks to get the CEO's options higher. And now the company is in free fall. We're talking about 14 quarters in a row of dropping revenues. Caterpillar just reported. Caterpillar, as Jim Cramer says, is the most important company in the world as far as his outlook for the global economy. They just reported, I think, the 34th straight month of revenues falling. We're talking about all that collapse here. And we're talking about commodities now in complete free fall. We're going to breach that August, in August of this year, 2 months ago, the CRB commodity index had a 40-year low. And it bounced a little bit off that, a few percent. We're going to break through that shortly. And then we're going to see some real pain. Or as I said in October of last year, I said crashing oil prices portend unspeakable horrors. And those unspeakable horrors are going to be political, economic, and social. And the money printing is only going to explode until finally Janet Yellen joins the party.
Yeah, well, we've said for a long time there's no way they could increase interest rates. And everyone's saying, no, they're going to increase them. They're going to go up. They're going to normalize, as they call them. And hey, where are we now? The rates are staying the same. And we're going to be right again on this, because what choice does Yellen have?
Well, rates are down near their lows. And in Europe, they're negative right now. And in Japan, they've expanded Abenomics indefinitely. And in China, they're in their own version of QE, which will only get crazier because China's economy is collapsing more than anyone else's. It was built up. It was a bigger bubble than anything else, and it's collapsing more than anything else. And, again, the whole thing with they're going to raise rates. Why? I've said all along from the beginning, from minute one, it goes all the way back. I'm not conspiracy theorist. I see the writing on the wall. They had this meeting, this quote, closed door meeting between Obama and the too big to fail bank CEOs. It was April 11, 2013. That was a Thursday. Then Friday and Monday, right, the 2 days after, gold suddenly fell like $100 and silver $6, just as Goldman Sachs put out a aggressive short sell recommendation. And all of a sudden, you saw the word tapering start to come into play. That's where they invented that word tapering. And I've said all along, the footprint of QE is still all over the place. I mean, we're seeing record foreign sales now of Treasury bonds, and yet Treasury yields are falling. Well, who do you think's buying them? Of course, it's the U.S. It's a Fed. Who else would be buying them if China is selling them? But forgetting that, there was tapering and the recovery and the imminent interest rate increases, but it was all based on nothing. There has been no recovery. The data is now. I mean, look, I wrote an article last week that was titled "The Worst Global Economy of Our Lifetimes." That's where we stand this second. I mean, I saw an article today. It said North American, not U.S., North American railway orders are down 83% year over year. We're talking about going back to when the data was first started being compiled in 1980. I was reading about the Long Beach shipping port in California, which I think is the biggest in the country. More than a third of all the cartons that are leaving now are empty. And that's just the United States, which is the strongest economy in the world, according to the pundits. There was never going to be an interest rate increase. We have the largest global debt in the entire history of the planet. And by the way, the debt ceiling is going to be raised next week. I mean, Jack Lew, I wrote yesterday, the terrible accident that he's talking about. He said we are going to run out of money on November 3rd. That is less than 2 weeks from now. And wait do you see how much they raised the frozen debt ceiling, which has only been frozen because they've been using what he calls extraordinary measures to steal from pension funds. They'll probably raise it by several trillion next week. And all of a sudden, the U.S. debt will go up by 500 billion or a trillion overnight. So, of course, they're not going to raise interest rates. And by the way, do you know who has the biggest balance sheet, the most exposure on the planet of any entity to rising interest rates other than the Treasury of the United States? It's the Federal Reserve. And because of their Operation Twist and QE, all they own now is long duration toxic mortgage and Treasury bonds, which will fall more than anything on the planet if interest rates were to ever rise. So they would be bankrupting themselves if they raised rates. And of course, if they did that, then it would cause the implosion of emerging market or currencies, which, by the way, I predicted 2 years ago, to get even worse. If they raised them a quarter point, you'd watch everything from the Russian ruble, the South African rand, the Brazilian real, Turkish lira, things that are already at all-time lows, plunge even further, and we'd have World War II instantaneously. And that's not even what's going when China joins. Remember, I predicted the Chinese devaluation the day before it happened. Just wait till they really start doing it, because I didn't predict, they'll do it by 5%. I said, no, they're going to devalue it completely. They're going to depeg it eventually because they want market share back. And that's going to really be, as I called it, the financial big bang to end all big bangs. And then you have Japan, which this morning they reported an 11% drop in imports. I mean, they're only going to go more berserk with their QE. It's across the board. Tomorrow, the ECB meets. Everyone's saying that they're going to talk about increasing their QE tomorrow. So, we're talking about some really scary things are about to occur. And it doesn't matter how much the cartel naked shorts gold so that it doesn't go over its 200-day moving average of 1176 or silver above its at 1597. It's not going to change anything. Remember, we at Miles Franklin, the bullion industry, the entire world, had its biggest quarter ever. Maybe you'd have to go back to 2011 during the third quarter this year after they smashed prices this low. And if they do this again, like they're trying to do this morning, the same thing's going to happen. And we have even less inventory than we've ever had before.
Yeah, it's breathtaking what they're trying to do there. And in the final analysis, we know from all the intervention that's occurred so far, it has absolutely no effect or positive lingering effect, and really has unbelievably negative effects.
It makes things worse. That's the whole point. That's the whole point. It's a Ponzi scheme, the fiat currency. It makes them print more money, and it makes things get worse. What has changed since all this happened? As I call it, the point of no return. In 2011, that's when the U.S. had its AAA credit rating stripped, and you had the first European crisis, and the Nikkei was at a all-time low. That's when they went all in. That's when they started smashing gold. That's when they all went in with the NERP, the negative interest rates, and the QEs. What has happened since then? Everything is dramatically worse. I mean, if you think about, where Europe is now, for instance, pick Europe and Greece. Think about where they are now. They would be desperate to get back to where they were at 2008 at the heart of the crisis. People don't even realize how much things have deteriorated since 2008, since the bottom of 2008. That's how bad things are right now. And they're only getting worse. The oversupply in the market of everything from commodities to infrastructure to government to ghost cities, you name it. It was already ridiculous back in 2008, but because of all the money printing, all the efforts to stave off economic mother nature since then, which by the way is now 7 years and counting, those imbalances have doubled and tripled and quadrupled to the point where we will never get out from them. Certainly not in, as you call it, the foreseeable future. We're talking about, as I wrote in January's direst prediction of all, we're talking about oversupply in commodities that could last for decades. No, I mean it. I'm saying the word decades because that's how much there is out there. It's not going to just correct the only commodities, which aren't really commodities in my opinion, where you don't have that are gold and silver. They have the opposite because their prices have been suppressed all this time. So there's been no capital investment, no discoveries. There's no people left. There's no geologists, no engineers, no capital, no nothing. And of course, once the price starts to go up, then the governments will nationalize everything as money. So there's no doubt in my mind we've seen this year. I mean, peak gold is not, it'll be here in a few years. Peak gold and silver were this year or last year. It's all downhill from here. I just saw Goldcorp just put out a chart showing that. Wait till you see how much silver is going to decline, as we predicted in our all-star webinar panel last year. Now that copper and zinc and lead are going to nothing, because that's where half of all the silver in the world comes from. And remember, we're having shortages now like we haven't had since 2011, 2008. And this is just the beginning. Just wait till the rest of the world starts catching on to this.
Oh yeah, the trends are firmly in place. There's really no getting around them. And if you think otherwise, you're really deceiving yourself. There's no magic bullet here. No, dua machina, as they called it in Greek, the hand of God coming down to save the day.
I didn't even know what that meant. That dues machina you're talking about?
Yep. Yeah.
I know. I always see that term. I'm not even sure what it means. Now I know.
It means the hand of God, basically. And little something, because the Greek plays, they didn't know how to end them. They weren't so clever back then. So they would basically a machine, the hand of God would come and save the day in these plays. And life just doesn't work that way.
No, it's not a movie. That's what's so sad. The world's addicted to reality shows, but the ultimate reality show is going on everywhere. And there's so many places that you see it already. I mean, people don't realize. I talk about Brazil because it's considered, one of the BRICS. I mean, Brazil is in complete all-out implosion. They're going to have a military coup there. They're going to have hyperinflation there. They have the Olympics coming up next year. I can't even imagine. There's a chance they won't even happen. I mean, this is the as they call it, the first world. These things are happening. And what's going on in the Middle East, in my opinion, is no coincidence. I wrote the other day, I said, at least in Vietnam, they had a reason, and people actually were worried about communism. It was a reason. Here I'm sitting there going, we're going to have World War II in Syria over what? I mean, China's there, and Russia's there, we're there, and Iran is there, and Saudi Arabia's there. And I'm going, over what? Yeah. Absolutely nothing. It's not even propaganda. Everyone is just simply there bombing and fighting. And I'm going, I could see why Russia would want to be there. They want to cause oil prices to go up. Their whole world is based on oil prices. But then again, so is the United States. People don't realize that. I've been saying all along, the only business where all these, quote, jobs, and yes, there have been part-time jobs at McDonald's for $5 an hour that have been created, which will go away, of course, and the birth-death model adds a bunch. But the only sector in the whole country, which since the financial crisis, this is proven, this is not my guess, that where you've actually had real jobs growth was the energy sector. All that shale production based on the Fed keeping rates at zero and all the banks coming in and lending money to all these companies that would never have got that money and making them invest in high cost oil. I mean, that's the only place that jobs have come from. And now they're all going to go away. So if anyone thinks, Russia's a commodity currency and everything with them is commodities, it's the same thing here. It's the only place there's been any jobs created in this country in the past 10 years has been in oil. And oil, as I speak, is down to $45 a barrel. It was $37 a few months ago. It's going to go a lot lower. And when OPEC meets in December, what do you think they're going to say? The same thing. They're not going to say, yeah, we're going to cut production. They need money as much as anyone. They've got I think Saudi Arabia's got its budget, its ridiculously bloated budget based on like $100 oil. I'm reading now that Saudi Arabia is borrowing money left and right and all these, they're all bankrupt. They're not going to cut production. They're all going to increase production. And the shale producers are going to increase it more than anyone now that their hedges have just expired. So they can't report earnings, even though they're losing money in operations, because they were a year ago able to hedge at $100. Now they can only hedge at $45. So they're going to produce as hard as they can. And then there's this thing called the frac log, which means a backlog of projects that have been drilled. And all they need is to just go in and produce them. And they're going to do that out of desperation for cash flow. And that's going to drive the price of oil down, et cetera, et cetera. So yeah, everyone's in the Middle East. They want to start a war and maybe get the oil price to go up. But of course, Kerry, what do you think would be the worst thing on the planet? It would be if there was a war in the Middle East, whether the price of oil went up, down, or sideways. So I don't know what's going to happen over there, but I do know that as we always see throughout history, horrible economies cause wars.
Yeah, always. It's when economies are prosperous, when everyone's making money, nobody wants to upset the apple cart. But when there's war, then when there's bad economies going on, that's when war occurs. And this is a pattern throughout history, and now is not going to be any different. And I just find it amazing that at these prices, normally people buy, they're basically buying stuff when it's going up in price. This tells me the really smart money is loading up on precious metals.
And exactly. I think Monday, I wrote an article called The Precious Metal Put or something like that. God, I'm losing my mind, all the things I call it. The Precious Metal Reality Put. And I wrote, and look, we've been talking about more than anyone how crazy business has been since that July 19th, that Sunday night, where they hit gold $52 in 1 minute. And they pushed silver down. And then from that time, July, August, September, it was probably our best quarter, maybe ever as a quarter. And certainly, I think August was our second best month ever. The only better month was in May 2013, after that big gold smash I talked about at the beginning of the call. The thing is, once the prices started, and it was straight through every day, massive buying, particularly of silver. And then once the prices started going up, culminating with the horrible jobs report on October 2nd, business just died. Last 2 weeks, business has been dead as prices have gone up. The thing is that people are scared of exactly what's going on right now. They're like, it's not going to, the price won't hold up there. It'll come right back down. It's exactly what the cartel is doing. Yeah. But when it comes down to the ridiculous levels that they've been, which we're not much higher than right now, people come in buying en masse. And that's in the Western world. It's mostly kind of vulture investing. Everyone knows the silver miners will go out of business and they come in here, and it's more from investment purposes. Where, of course, overseas in the East, they couldn't care less if the price is up, down, or sideways. They are buying, buying, buying. And when we end 2015 in 2 months, it will unquestionably be a record year globally for gold and silver consumption. And that's not even going to be, and that'll be even excluding the fact that now a lot of Chinese importation isn't even published because of the Beijing free trade zone. A lot of the Indian buying isn't published because of the big black market that created when they had the trade tariffs. And still we'll have record demand where we have, and any objective measure of inventories is as low as I've ever seen it. Anyone that you see anywhere. And of course, as I said, not only is production peaked and on its way down, but the mining industry is collapsing. Yeah. And just because the mining shares went up a few percent for a week or two, and everyone's running in going, see, mining shares are great. No, the average mining share is down about 80 to 90% over the past 5 to 10 years. And even the best ones have dicey balance sheets. And when you see a crash like this, from the highs, all of a sudden, remember, the third quarter ended with prices near their lows. There's going to be write-offs, and the fourth quarter write-offs are going to be horrifying unless the cartel breaks in the next month or two. And remember, all those people who predicted that going to happen still hasn't happened. So get ready. I mean, we're going to see some real carnage in the mining sector as the companies have to write off their bloated assets and scramble for liquidity. And it's only going to make production fall even further. And again, that's not my vote of whether I like mining shares or not. I'm talking about the mining industry. It's indisputably at in its worst shape, probably worse than when gold was $200 back 20 years ago because of the inflation of costs and the worst balance sheets they have. We're talking about there's not a single thing out there that doesn't scream higher prices.
Yeah, well, we've said it before. We're saying it now. And opportunities to protect yourself. You're running out of time. Anyway, go over to milesfranklin.com. Make sure you check out subscribe to Andy's daily missive along with his audio blogs, and check out financialsurvivalnetwork.com as well, because we've got the evidence there, articles coming in from all over the world that our webmaster Stefan spends hours each day bringing to you. Andy, we will talk to you next week, and buckle your seatbelt.
Yep, and go Mets.
Go Mets.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.